Germany is said to outpace earlier growth forecasts over the next couple of years, according to two top economic institutes. The forecasts from the Kiel Institute for the World Economy and the IFO Institute don't come as a complete surprise, considering the new German government recently pledged a big boost in spending. But they are a welcome change after years of stagnation and contraction caused by successive shocks like the pandemic and the invasion of Ukraine. The downturn appears to have bottomed out, said Stefan Kutz, head of forecasting at the Kiel Institute for the World Economy, known by its German acronym IWF. He added that after 2 tough years, private consumption and corporate investment are beginning to pick up. The IWF revised its growth forecast from 0 to 0.3% this year and from 1.5% to 1.6% in 2026. Those figures largely align with new estimates from the Munich-based IFO Institute, which lifted its 2026 forecast by 0.7 percentage points from 0.8 to 1.5% after initially taking a more cautious view of next year, partly due to potential risks caused by U.S. President Donald Trump's tariff plans. Germany is by far Europe's largest exporter and a prime target for U.S. tariffs. Economics director at the IFO Institute, Timo Vollmershauser, said that this positive outlook is partly due to fiscal measures announced by the new government of Chancellor Friedrich Merz and the hope that an agreement will be reached in the trade dispute with the U.S. The new IFO forecasts are based on estimates of new stimulus measures worth 10 billion euros in 2025 and 57 billion euros in 2026. Injecting money into the domestic economy is particularly important because analysts say the better-than-expected 0.4% growth in the first quarter of 2025 was likely a one-off, primarily driven by companies rushing their exports to the U.S. to avoid anticipated tariffs. That factor will likely be reversed over the next few quarters, bringing the growth rate back down in the near term. The institute then warned that if trade troubles with the U.S. escalate again, this risks offsetting positive impulses and could throw Europe's largest economy back into recession. IWF's president, Moritz Sulerich, was clear that trade policy risks remain substantial and that the U.S.'s erratic tariff policy continues to fuel uncertainty for German foreign trade. We need to find good solutions for all sides because we can see that all participants are suffering from the uncertainty from trade conflicts, Economy Minister Katharina Reich said, hosting a delegation from the Organization for Economic Cooperation and Development in Berlin on Thursday. The OECD has also become more optimistic about Germany's near-term growth prospects, projecting gross domestic product growth of 0.4% this year and 1.2% in 2026. While the new OECD report on Germany welcomed recent fiscal rule reforms that will allow higher spending on rebuilding defense capacity while addressing a large infrastructure backlog, the Paris-based think tank urged government not just to throw money at its problems, but rather enact a slew of structural reforms. Its proposals include raising spending efficiency, reallocating spending, and broadening the tax base. It also called on Berlin to lighten the administrative burden and regulatory barriers to competition to revive business dynamism, innovation, and productivity growth. It also suggested various measures to support a labor market in crisis due to population aging. These include strengthening incentives for women to re-enter the workforce and for low-paid and older workers. They also advocate for further reducing barriers to skilled migration, as well as improving education, training, and adult learning policies.